And we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart. Welcoming you back here on another Wednesday for another Wednesday recap of all things precious metal and sound money related with my good friend, Andy Schectman, CEO, co-founder of Miles Franklin, which is the endorsed precious metals solution by Thoughtful Money. Andy, how are you, my friend?
Adam, I'm great, buddy. It was wonderful to see you in person last week at the Rules Symposium, and appreciate the invite in here today. Thanks for having me.
Well, you beat me to the punch. I was going to say how wonderful it was to finally get to meet you in real life as well, or IRL, as the kids say these days. Folks, we will hopefully be joined, hopefully relatively soon, by Jason Cozens, the CEO of Glint, or Glint Pay. A little bit of uncertainty whether he's going to be able to join us or not, but hopefully we'll bring him into the conversation. If we don't get him this week, we'll hopefully get him next time. A couple of things I want to talk about with you, Andy. One, and this is the reason why we're pulling Jason in, is I think Texas just announced that they've passed legislation recognizing gold and silver as legal tender within the state of Texas. That's one of a number of states that have over recent years passed similar legislation. So there's this building movement amongst the states to basically return gold and silver to their true monetary status, where you can use it for things like paying your taxes, but also eventually, I think, just any sort of commercial transaction. Would love to get your thoughts on that. I know that you and Jason have been pretty directly involved in the action in some of those states there. So we'll get to that in just a little bit. But I do want to say, Andy, it was so nice to meet you. One, because it's just fun always to meet somebody that you've known virtually in person. But two, you gave a really interesting presentation. I was kind of frustrated because I was the MC for the bullion panel, or the bullion session that you were speaking at, and my duties kept pulling me in and outside of the room, so I couldn't see your whole presentation, but I caught parts of it in the interim. And basically, what I took from you is you're saying, hey, look, the BRICS threat to the U.S. dollar is real and not to be dismissed, and you go through a whole bunch of reasons why. I don't think we have enough time to do that justice in today's conversation, but I wanted to flag it because if there's enough interest amongst the audience in that topic, and I'm going to guess there is, we'll find out in a second to see how people react in the live chat. Maybe the next time you come on, Andy, we can really do a deep dive into that. You can pull up your slides and everything and go through that presentation for folks.
Yeah, I'd love to. Without getting into it, I've covered it to the tune of over 4,000 YouTube videos since 2019, and I will comfortably and confidently say I was, if not the first, certainly pretty darn close to the first one in America that was beating this with a stick over everyone's head. And the information that's come out as of late, in my mind, massively ignored and underestimated, might be the biggest news I've heard since I started covering it. And I think it's a mistake to not understand it, and certainly to underestimate it, I believe, is a huge mistake. So I would love to do that if there's enough demand. Color me interested if so.
All right. And folks, if so, let us know in the live chat here, or if you're watching the replay in the comment section below. If demand's high enough, we'll try to do that next time Andy comes on. The other thing I wanted to say about how fun it was, Andy, getting to meet you in person, is you and I have gone back and forth a bit here on camera about how much we appreciate each other and have admired each other's work for a while. It was so nice to see how well respected you were, not just by the audience that was there, who I'm sure knows you from your internet presence, but really more from the other panelists on the bullion panel. These are guys who are running what some might say, competing companies. But one, there's just a nice camaraderie amongst you. But two, I was speaking while you were speaking, I was sitting with a fellow who was going to go up after you. And he just couldn't have said the nicest things about you. And then I learned you guys were going off to play golf afterwards. It really speaks a lot when your biggest competitors think so highly of you. So I just wanted to give you that public affirmation of that.
Shout out to Rich Checkin of Asset Strategies, and he's been a very good friend, as has his uncle, Michael, who I've known for the better part of 25 years. We were both tied into the Swiss insurance industry through Swiss Investments, a company called BFI Consulting, going back almost 30 years. And They're very, very, very wonderful people. And you're right. There's enough business to go around, and it's better to. I go to these shows, Adam, largely for that reason, because it's the people within the ecosystem that I think they help. It helps a lot to not only have camaraderie, but to learn from other people, to solidify friendships with other people that are in the industry. Guys like yourself, guys like Rick Rule, guys like Rich Schectman, and many of the others. Of course, I like to talk to the customers and the clients and whatnot, but in my estimation, success comes through relationships, and it's added a tremendous amount to my success in forging those relationships over 35 years. I think it in many ways defines my success. So I appreciate you acknowledging that. And yeah, Rich Schectman and I did play golf, and he and his company are amongst the class of the industry. So I have no problem understanding and recognizing that's what good business is.
All right. Well, look, one last thing before we get to the meat of the discussion today. I'm going to pull you up full on the screen here, Andy, to show your new studio. Miles Franklin has invested in a great new multimedia studio. I know you've got your media partner there, Michelle. Pronounce her last name for me.
Michelle McCory. Many people will remember her from running Kitco's media presence, and we couldn't be more excited to partner with Michelle and have her run our new media division. In fact, her and I will be doing our first podcast later on this afternoon, but she will have a full very expansive slate of guests, hopefully yourself included, that will be very wide-ranging, that will be very open-minded, that will look at all three sides of the coin, not just the front or the back, but the edge too, and find where you fall into things somewhere on one of those three sides. So we're very, very, very excited to have Michelle, and thank you for acknowledging that.
Oh, well, look, again, congratulations on that. I look forward to watching. I'm sure a lot of the audience does here too. If I'm fortunate enough to come on the show, I'll try to do right by you guys, Andy. Hey, good news, two things. One, as expected, a lot of interest in that BRICS presentation, so we'll make sure to schedule that, Andy. Secondly, we are now joined by Jason Cozens, so his timing is perfect here. Jason, how are you?
I'm great, thank you very much.
Hello, Jason.
Thanks so much for joining us. Jason, I let the audience know that was very interested to have you join us today. One, because Glint's an interesting solution, and if we have time at the end, we'll talk a little bit about it. And at some point in one of these Wednesday sessions, I'll have you on by yourself, and we'll do a real deep dive into the Glint and the whole Glint Pay ecosystem. But the topic I was most interested in talking about is the growing movement that we're seeing across a number of U.S. states in passing new legislation that recognizes gold and silver as legal tender, as currency, and really kind of bringing precious metals back to their true monetary role. And I know that you've been directly involved in that in several of those states, as has Andy. So I thought it would be fun to really just sort of hear from the trenches from you guys in terms of what's driving this? Why is this a building movement for sound money? I think most of my viewers here are excited to know that this is going on, probably hoping that their state, might follow suit. And I'm very curious to hear where you guys think this ends up for gold and silver. Does this actually change things at a federal level at some point here? So anyways, we can dive into this any way you like, but maybe Jason, since the audience doesn't know you yet as well as they know Andy here, if you could just give maybe just a quick 30 seconds background on yourself, your role at Glint, and then just tell us how you got plugged into this movement in the States and what your level of involvement has been to date.
Yeah, sure. Thanks, Adam, and nice to see you both. It's always great to talk to you. Titans in the industry, but quickly about myself. So I'm the founder and the CEO of Glint. Glint is the first company in the world to enable physical gold that's really in the vault and insured by Lloyd's of London to be able to be utilized in transactions, electronic transactions, real time at the point of sale. So literally with your app, your MasterCard, you can actually spend your gold when you need to, because I firmly believe that, sound money is something you should be able to spend as well as save. But yeah, I came to this because back in 2008, I sat in front of the TV as the world came to the brink of a complete financial collapse in the system, and it was the first time I realized that the money in the bank is not really there. There is no money in the bank, and that my money depreciates in ways outside of my control. So I learned about the destructive effects of inflation, and also that gold had been money for thousands of years and had backed all of our money until 1971, when Nixon took us temporarily off the gold standard. So yeah, I set out to set up Glint, and I'll go straight into this into the U.S. Constitutional gold and silver currency. I mean, I think in a world that's drowning in debt, constitutional gold and silver currency is the lifeboat. They're not just money; they're of course freedom in our pocket. And I first came about it quite by chance. I saw a tweet by some of the people really driving the movement on this in the United States about proceedings in the Texas Senate, where someone had said, look, when we pass this law and make gold and silver, electronic gold and silver legal tender, we're going to need a platform like Glint. And so I got in touch with them and found out that there was this whole amazing movement trying to do similar stuff that I was doing, but not from a technological side, but from the legislative side. And I found out that there actually, I think at the time, this was about a year and a half ago, 2 years ago, I think there were about 6 states that I knew of at the time that were interested in this. And as time's gone on, it's grown to 22 states. So half the union is either legislating, working on, considering or drafting, or in fact have passed or even signed into law legislation that makes gold and silver bullion that it can participate in electronic payments legal tender.
So what's at the heart of that, do you think, from these states? What's the most common argument that the legislators that are bringing these bills up, what are they making? Is it your freedom in the pocket? Like, this is something we want to enable each of our residents of our states to be able to do? Is it more, hey, we just have concerns about the devaluation of the dollar, because of the deficits and the debt at the federal level, and we want as a state to have some protection against that? What's really driving this?
Well, I think all of those things, but the two ones that really stand out, or two or three, is $37 trillion worth of debt, which you talk about a lot, of course, as Andy talks about as well, not including even the unfunded liabilities like Medicare and Social Security. I mean, that's extra. That itself, I think, was declared by the U.S. Senate as being a matter of national security. So, if it's an issue for the Senate of the United States of America and they declare it a matter of national security, it certainly is a matter of state security, the problem around that debt. But then what do they do about it? A lot of that's out of their control because, of course, this is at the federal level. The next thing, of course, is the destructive effects of inflation that I mentioned as one of the reasons I got into Glint in the first place. And it's absolutely, shocking that people's hard-earned money has this stealth tax, which is predominantly caused, in our view, by significant money printing at the federal level. I think 20% of all US dollars in existence, as you know, were printed in COVID, in 1 year during COVID alone. And of course, that dilutes the purchasing power of money. There are other things. I think there are some states that are worried about federal overreach. But what can they do about any of this stuff? A lot of it surrounds and centers on the money and the nature of money. And on the face of it, many people might think, well, there's not much that these states can do, is there? But actually there is. And some people called it the hidden solution in the Constitution, but actually it's standing out pretty clearly in Article 1, Section 10, Clause 1 of the US Constitution, which actually forbids any state to make anything a currency except gold and silver. So this is a right that is already with the states. The states don't have to go and try and get this right. They have this right. And they think, well, okay, let's just bring sound money choice to people to allow them to save in gold and silver and not be and not have the destructive effects of inflation, and not have to worry about not as much anyway the national debt. Because of course the other thing which you've probably talked about on your show as well is that those closest to the money supply benefit disproportionately from those furthest away, beautifully explained by Cantillon. It's called the Cantillon effect. And of course, these legislators, these state representatives, closer to the people than anybody else, they're speaking to their residents, constituents every day, and they can see the effects it has, especially on the lower middle classes, and in some cases devastating. And so, it gives them, it's all about really serving those people. But of course, the first question people go is, what are you talking about? Gold and silver? Are you going to go into a coffee shop and chip off a little bit of a coin or a gold bar? And how's that going to work? It's not going to work, is it? And in fact, in 2011, Utah made gold and silver legal. And they certainly made gold legal tender. It might have been gold eagles that are minted by the Fed. But the IRS carried on charging capital gains tax on those coins, even though the state had made it legal tender, which is their right. And the argument that the IRS had was that, well, you might have declared it legal tender, but let's be real about the Constitution here. What it was really talking about was the fact that we're making something functional money, and these gold coins are plainly not functional money in today's modern digital ecosystem. So I think when I met the people, incredible people at the Pirate Money book that was written by Kevin Freeman, which kind of explains all of this and was a great tool for legislators and people to understand how this might work, and his colleagues at the Economic War Room, who went tirelessly state by state, legislator by legislator, galvanizing grassroots activism. I mean, it was quite incredible to witness, a real privilege for me. But I think the thing that I'm very happy that I was able to bring to the conversation was to be able to stand up in front of legislators and say, look, it's actually really easy. Glint is an example of how this might work. We're already in America. We already have, I think 60% of our clients are in the US. And look, it's really easy. I can show you how to use it now. In fact, let's pop down to the coffee shop and buy something with gold. And that was I saw time and time again, you may be speaking to a state treasurer. I mean, someone epic like Marlo Oaks, who's, I think some call the US, the country's treasurer. He's got such a great reputation. We got to make this done. He walks out the room, of course, and then you're left with the deputy treasurer, who's the one who has to do all the work, maybe. He's like, hold on, guys, just slow down. We've got to give this plenty more time. How's this going to work, Hey, it's lunchtime. Is there somewhere we can grab something to eat? And you go and show it to them, and they're like, wow, instantaneously. Wow, you just spent with gold and anywhere in the world almost where this card's accepted. Wow. We've got to get this done as quickly as possible.
That's good to hear.
Yeah. So I don't know if that answers the question there.
Can I ask one question of you, Jason? Have you heard any rumblings of perhaps the federal government relinquishing the capital gains laws if indeed it is used in commerce?
Look, I think there's three. The Economic War Room guys came up with 3 T's, they called it, so it's easy for us all to remember, about what the benefits of the state are giving this movement, and why should the state get involved anyway? Because, well, something like Glint already exists. Well, those 3 T's are trust, taking, and taxes. So quickly on the first 2, you can imagine that like in Florida, you've got the legislation tasks the Florida Office of Financial Regulation to create rules around this legislation. We're going to go dive into the detail, and they're the ones that are going to be overseeing this. And that includes things like they're going to make sure the companies and the platforms running these electronic systems are of good standing, that they're auditing the gold, making sure it's definitely in the vault, all of that kind of stuff. And so that's going to build a lot of trust. And the second thing is taking, of course. we know, but not necessarily everybody listening to this video will know, that actually owning gold between the 1930s and 1970s was illegal for individuals. And so that was something that was set by the national federal government. So they can protect, because this is a state initiative, they can protect against that taking. And the last one, Andy, comes to your point about, well, this is effectively an authorized currency of the United States of America, albeit state ordained, which is possible because you have this wonderful system where, you know, the states can keep the federal government in check and vice versa. Well, that's certainly how the balancing is supposed to be. It seems to have been designed by the founders, and sometimes that gets out of kilter. And here we have the state doing that, and so they can stop the taking, but they can also they're coming in and saying, well, look, we're making this legal tender, we're making this currency, and by all accounts, then the IRS should have no choice to be able to let capital gains tax drop away. And certainly in Utah, where you had, for instance, the former vice chairman of the Federal Reserve on the committee studying this on behalf of Treasurer Oaks. I mean, you can't get anyone higher in the country than that, maybe, when it comes to what might happen. He was very positive in saying, you know, people should have the choice to be able to save without having the destructive effects of inflation hitting them or unfair tax that comes from that inflation. And why shouldn't they be able to do that and they still be able to spend in dollars? Because the dollar is still the main medium of exchange on the planet, and they certainly believe it's going to be like that for a very long time. As to its capabilities or its power and being able to store a value, maybe that's what's driving some of this activity. But it's going to have to happen in one of a few different ways. There are obviously processes that back all of these tax systems. The IRS could declare themselves that because of this legislation being passed, that they see that they were going to drop capital gains tax. That is possible. Anything's possible under this administration, I think. I think the other idea is that, you know, Congress could decide to make an amend, and that might come through, you know, different ways. I think there's a few different ways, but I think one of them could be the president as an executive order. We don't know exactly how that might play out, but the point is that the pathway is now laid very clearly for the IRS to be able to drop capital gains tax, because it is the most immoral tax in our view, and a lot of the proponents of this bill.
Let me ask you this. This may be a very naive question, but I want to ask it in case other people have it in their heads too. Yeah. Which is, Jason, if I wanted to, and I think most people, based on their comments in the chat here, would not want to do this, but just as an exercise, if I wanted to pay my federal taxes with gold today, would the government accept it?
So federal taxes, I don't think so. I mean, the states don't have any power over the federal government. And I think one of the practical issues is that, of course, whether you're paying taxes at government or state level, there's whole IT systems and stuff that back all of those, all those payment systems behind the scenes there. And to be able to drop legislation on people and then say you've got to suddenly start accepting gold and silver in payment of your taxes, it's just going to clog things up and stop things. We all know how sometimes when things are done by the government, they're not exactly done in the fastest and most efficient way.
What?
As the Doge teams have found out. But some states have said that that the Treasury Department, the Department of Financial Services, whichever department is responsible for taking taxes, some states with their legislation have said they give the right to the Treasurer to choose to do so should they wish. And in Florida, they've said, well, you can do that, but as long as it's converted automatically to dollars.
Right,
at the point of transaction, which is similar to, with something like Glint. I have two choices. I can pay with my card. Sorry, just quick plug. That's our Glint card there.
Yeah.
I can pay with this, and the merchant, of course, receives dollars. He has no idea. It's like flying to London and you paying with your US bank account card. It gets exchanged from dollars into pounds in real time. The same thing happens with gold into the currency of the merchant, whatever it is, with glint. But then the second type of being able to pay is what we call peer-to-peer, the ability to send gold to one another account as quick as and easy as sending a text. Mm-hmm. Now, we haven't switched that on in America for various reasons, which are, I think the regulations are becoming much clearer now and much easier to understand, especially with the state stuff. But we intend on switching that on. We hope that we'll be one of those providers of these systems. And I think in time, the state might very well not convert the gold into dollars.
Dollars to just keep it, yeah.
But that would mean they have to set like a gold account up. They'd have to talk to their ERP system provider, their software providers, and say we need a new currency on our platform. So I'm not expecting that for a few years yet.
Okay, all right. But where I'm going with this is, and by the way, Jason, again, I know we're kind of giving people little tiny bites on what glint is in this conversation. I'll have you back on and we'll do a deep dive and let you be able to really tell everybody. But the point, the key point you're making for folks here, which is, look, a lot of this technology platform already exists to do a lot of the things we'd like to do. It's just not widely adopted by these state and federal players in the U.S. But my question was just more a basic one, which is, as you said earlier, the Constitution specifies, right up front, that the only form of money in this country should be gold and silver, and yet I can't use it to pay my taxes to the federal government, right? So we're in this really weird state where we have this very clear directive, and yet the government is not operating by it, right? So maybe one day we'll get back to this if we end up continuing this movement towards a sound money standard. And again, the states themselves seem like they're leading the way here. A couple questions for you around this. So if I understand it, if I'm remembering the Constitution correctly, there are several ways in which we can amend the Constitution, and one of them is legislatively through the Congress. But another one is if enough states get together and force a referendum. And I think it's 2/3 of the states to force the referendum, and then maybe 3/4 of the states to approve it. A constitutional scholar can correct me here if I'm wrong, but it's somewhere in that ballpark. Is that potentially what we're building towards here? You said there are 22 states that already have, this legal tender recognition of bullion. They've either done it or it's in progress. Are we working our way to a potential 2/3 supermajority where the states could actually force this issue onto the table?
Well, look, I'm no constitutional lawyer, but I have been in the room and I've heard this type of thing discussed. And I think the general opinion that I've heard is that's a very dangerous route to go down. The ability to enact that kind of nuclear option can be used by any political leaning party, group of people, and the Constitution has stood the test of time, what's written in there. Of course, you've had amendments. But I think some people are, outright, even people behind this are very worried about using that process. But it's not my speciality. But yeah, I think that's the one thing I'd say I've witnessed.
So I'm just curious then, if you had your druthers, how would you like to see this movement build from here to the point where the government, federal government, starts adopting some of the reforms you'd like them to see? Is it going to be pressure from, within the states to their legislatures who are then bringing the pressure to bear in Congress? Or would you like everybody to write Trump and have it be an executive action? Like, how would you like to see this reform pushed through?
Well, I mean, look, I think that the first things first, like anything's possible, like in technology and in business, but it just depends on how much it costs, how long it takes. And I think what you've got to be careful of is that you don't try and do too much at the same time, because nothing gets done. Here we are. It's incredible. I never thought for one second that there would be state governments wanting to do this. This is beyond my wildest dreams, and I think we should get behind it and make it happen. I think if it was something that was the easiest way to getting capital gains tax removed from this, that is probably, now that you have we have 6 states now have passed laws to pass this into law. Is that right? About 6. Let me think. There's Florida, Arkansas, Texas, Louisiana, and Missouri. 5. Utah did pass the law, but the governor, for some reason, vetoed it. But you have 5 states that have actually put this into law. It's now going through the process in some states, like in Florida, as I said, of rulemaking, etc. It's all going to be live very quickly. But I think the most important next step is to make sure the capital gains tax falls away. And for me, the easiest way for that would be an executive order by the president.
Okay. And just to let folks know, the reason why capital gains tax, we want it removed, is one, nobody likes paying it, obviously, right? And I believe it's taxed as a collectible. Correct me if I'm wrong, but I'm not sure if it's a traditional capital gains tax, but it's like a 28% collectible tax or something that's on it, right? All right, Andy's giving me the thumbs up. What we want to do is put it on par with the dollar, meaning in any given year, you're not taxed on a capital gain on your dollars, right? So we're just trying to give gold and silver the same treatment, right? That no matter what happens with their relative purchasing power, it doesn't matter because they're money and money shouldn't be taxed. Am I understanding that correctly?
Yeah, perfect on all of those areas. And I think, once you've got something like this in place, and effectively it acts as a mirror. And so it kind of, in a way, will hold, I'd like to think it would hold government more to account than it has normally.
That's why government hates it.
Yeah.
Because it does act as a mirror, right? It's pride.
Yeah.
But
a lot of people,
that's what we as the populace would like, with that transparent mirroring, making it available for everybody. Hey, you're continuing to devalue our dollars because we can see the price of gold and silver just outpacing it.
Yeah, it's the only barometer in the room that's actually giving you the right temperature. Everything else in the middle of the night, federal government comes and changes the scale. You think it's hot or cold.
I will ask at some point in this discussion about Bitcoin, because the Bitcoiners are going to say, hey, that's what Bitcoin does too. Let me ask you this, and again, Andy, feel free to chime in any way, shape, or form here. So we're talking about these state reforms, this new legislation, really as a way to so far in the discussion, protect the individual, right? Put freedom in everybody's pockets. But the states themselves could also take steps to benefit, right? So in other words, they could begin to hold more of their state treasury in precious metals. And I know in Utah, Ken Ivory, who you and I have been in touch with, Jason and Andy, I'm guessing you probably crossed paths with Ken too. I know he's pushed for that, and I think they even passed some legislation that the state's rainy day fund is some percentage of that is able to now be invested in gold and silver. So, we may see more of that happening in states, right? But secondly, and this is kind of interesting, in a state like Utah, where their number one export is gold, where they have gold mines in the country, so they could theoretically, have a state mining operation and a state treasury operation to go mine the gold out of the ground and then put it in their state treasury. So there's a way for at least some of these states that are blessed with gold deposits, if this movement continues, you can really advance your station here if you make this a priority. Is this correct, or am I just talking wild here?
No, you're not. And Utah actually, I think, was probably the most advanced in terms of the plans that legislators like Ken Ivory are putting forward and that the Treasurer was supporting. And in fact, their bill kind of got watered down as they came across some opposition to it within the apparatus. And you're right, they've got some great mines in Utah that are producing gold. They've even got their own LBMA refinery there, the Asahi refinery in Salt Lake City. So they've got the whole ecosystem. They've got it being birthed through the mining process. They've got the refining process for making it, the same standard as all tradable gold on the planet. They've got a vault there. So they've got for instance, there's a Brinks gold vault there, one of only, I think, 4 in the US. There's one in Miami with Andy, I know, uses, and I think he uses the Salt Lake City one. Don't you use that, right?
He does, yeah.
For your clients. So they've got everything. And so they've been talking about all kinds of things. As you said, they've actually bought up to now $100 million worth of gold for their state reserves. They are the first state in America to actually hold gold in the reserves.
And sorry to interrupt, Jason, but over what period of time? Is that relatively recently they've added, or they put 100 million in?
Yeah, so you were, I think, testifying there with them. The bill was passed. This is last year's bill, which instructed the Treasury Department to form a committee to study transactional gold, but also said the Treasury has the right to buy gold for some of the rainy day funds. And actually, Glint was very fortunate to be chosen as the company to be able to provide that gold to the state. And we did that with over about, I don't know the exact time, but about 6 months. And they still have some firepower in their ability to buy some more, I think. So hopefully that's a model for other states. I mean, it's pretty crazy that individuals, businesses, and the federal government are all buying gold, but the state wasn't allowed to. And I think we'll see more states, and I know of more states wanting to do the same thing. But actually, Ken Ivory is such an innovative man. He's talking to Judy Shelton, which I think certainly Andy knows, and maybe both of you know. They're talking about all kinds of things like gold-based bonds and stuff. That's maybe more your area than mine, but paying taxes in gold, all of this kind of stuff. They were all going for it all. And I think the governor was just worried about the technical implementation of this and was it possible? But of course, the committee looked into that and know that it is.
Right. So just want to give another shout out to Ken. Ken has been at this since I've known him, which has been at least 15 years. So he's one of these guys who's really been carrying water for a long time and just, a bulldog on this, just refusing to give this up. And it's been crazy to see how hard it has been and challenging for him to do this in probably one of the states that's most open to this idea. And there's still lots of obstacles, as you've just mentioned. And maybe just ask you to guess on this, Jason. You say it runs into opposition, right? Even opposition of the state owning precious metals. Like, who would be against their state owning some precious metals? What would the oppositional argument be there? Like, why shouldn't we do this, even as just a diversification standpoint?
So the good news is I've seen where it's done well, bipartisan support for this, which has been phenomenal, often unanimous, which is extraordinary. I don't think it's ever happened, that type of thing, unanimous support for legislators for this. But there is resistance, and people like Ken Ivory, as you say, big shout out to him. And he works tirelessly. They hardly get paid anything for the work they do as being state representatives. And yet I've seen literally through their blood and their sweat trying to work on things which they believe and their constituents believe, things that need to get done. But I mean, I think ignorance is one of them, and that was one of the first things. People wondering, are you talking about people going in to pay at a Starbucks with gold bars and coins? And are you going to force the coffee shop in Salt Lake City or in Miami to accept gold coins and silver? And is this going to cost the business more? All this type of stuff. And of course, it just runs straight away into a lot of, mud and clogs the progress down. So that for me is kind of innocent and ignorance, which is something you can deal with through education, and I was pleased to be able to help with that in that area. But sometimes, unfortunately, politics is a difficult world, and I saw in one state, where there was some horse trading going on. Well, I'm trying to get my bill across the line, and were you going to support mine?
Yeah.
Or you didn't vote for my last bill. Are you going to vote? Why should I vote for yours? And you're looking a bit big for your boots, and I think I need to knock you down a peg. All that kind of human politics stuff, which is the ugly side of politics, of course, gets in the way. But you know what? The people have spoken. They want this. I think in some states it became definitely in the top 10 most wanted to be discussed legislative issue.
Popular movements. Okay.
This is where people have the power, and you should use it.
Okay. And where I was going with the question was, I get ignorance, I get politics as usual. I was curious if, especially for things like, should the state treasury just own some, right? Which isn't as logistically hard as, okay, we're pushing this on coffee shops, right? Is there any opposition there that's kind of like deep statey or swampy, where it's like, hey, this guy's pushing back because, perhaps somebody in Washington is leaning on him saying, hey, we don't want this to come up to the federal level, so we're trying to kill it here?
No, I haven't seen that. But actually, you did remind me, the banks in some areas, in some states, the bankers were sending lobbyists in to try and kill the bills. And I don't know if that was swampy, deep state, but I mean, they came in pretty hard. And they definitely killed it in some states. They'd say things like, this is unconstitutional, this is against the law. You know, if you're a bureaucrat, you're going to go to jail. And this is crazy. And even when I try, you know, I think when people try to engage with them on a, well, let's try and get to the root of why you're trying to deal with this. Are you worried about deposits leaving your bank accounts? Is that one of the issues? Well, you need to understand two things. People have either moving their money out anyway. You know, they are already moving money out of your bank accounts to buy gold. I forget, I get these two numbers mixed up, but I think it's something like 36% or 48% of all Americans have already bought gold, and another 36% are considering buy it. There was a Gallup poll on this. You know, something like 28% of all people in America think gold is the most important investment. They're already moving money out of bank accounts. And of course, the interesting thing as of July the 1st is that gold's now been declared, certainly under the Basel rules, as a tier 1 asset.
Right.
And so banks, you know, should be able to speak to the FDIC, et cetera, and allow any gold that they have to count against towards their capital adequacy requirements. But that would require that gold to be sat on their balance sheet. And that's not quite the spirit of this movement, where the gold should be owned by the customers under their legal title, not the legal title of the bank with a liability to them. But that's a whole nother world. But yeah, the banks were quite tough in some areas.
Okay, and I can understand that. I mean, they for a whole bunch of reasons, but one is the vast majority of dollars are created through the banking system, and they probably don't want anything that's going to, you know, interrupt their advantage there.
Just straight off the keyboard, ex nihilo.
Exactly. All right, Andy, I got to thank you. This is the longest I've ever heard you be quiet, and I know that I'm sure that Jason has mentioned a number of things that you would like to pile on. So I want to take a breather here and just give you a chance to chime in on anything that you think is important for the audience to know about what we've been talking about so far.
I think Jason dots all the I's and crosses all the T's. I agree with all of it. And I think you can just look at this year as a prime example. The dollar's down 10% and gold's up 38%. So you're talking almost a 50% swing. And if the state were to have been holding its reserves in gold, it would be far, far, far better off from a standpoint of purchasing power than it would be just holding it in dollars. All fiat currencies are inherently meant to die. And the policies of this current administration center around a weakening dollar and lowered interest rates, which is inflationary. This is why the smartest money in the world has been accumulating gold hand over fist, that being the central banks. And I would add into it somewhere in the neighborhood of 100 billion with the B dollars that we know of, and I would argue there's probably a lot more that isn't reported, has been delivered into the COMEX market since November. And you're talking the most well-informed, the most well-funded, and the most sophisticated traders on the planet. Now, who is doing this? Who's got those pockets? And so, yeah, I think that there is no question at the highest level. And the only ones who would vote against that would be the banks, because it takes away, obviously, much of their power and leverage, as they've already seen a mass exodus of deposits leave the banking system chasing yield into treasuries. I'm sure the last thing they want is to see legal tender in gold, which would be a far, far, far more sound way of holding your wealth. And, you know, people get too focused on return or yield. There is no yield on gold, obviously, and they focus too much on that. But if you look at its performance over the last 25 years, it's doubled the performance of the 10-year treasury. So it doesn't need yield attached to it, because inherently what it does is it maintains your purchasing power. It sniffs out the stealth monetization or the stealth inflation that is inherent to the system and continues to move higher. Whether you look at last year, gold was up 40%, the 10-year treasury up 4.5%, or this year, the 10-year treasury up 2.5% halfway through the year, but the dollar down 10, you're negative 7% in the hole plus. Yet gold's up 38%. So when you talk about allowing the constituents the ability to get out of the way of irresponsible fiscal policy and arguably brain-dead monetary policy, it would be the best thing in the world for the constituents. Jason, am I wrong in saying that it was a unanimous bipartisan vote in Utah, but for whatever reason, the governor vetoed for the first time a unanimous bipartisan agreement? Am I wrong in saying that?
So it was unanimous, I think, in the House, and I think nearly unanimous in the Senate. And it's certainly certainly of his own party, the Republicans, was unanimous. And I don't think that's ever happened before.
His reasoning in that case, when you have the entire will of the people and the majority of the legislature saying, yeah, let's do this. The state feels it's smart enough to add $100 million into its coffers. What was the reason to veto the legal tender status for transactions?
Well, I think the official reason was that he didn't have confidence that there was a technical solution to it.
Yeah. Okay.
But, who knows what the real reason is?
Therein lies the problem with politics. But yeah, I mean, what you are doing, Jason, not only in building a wonderful business, but also in really representing sound money, and in many respects, the United States, the will of the people with the legislature is fantastic, and it's a growing trend that I think will continue to manifest. You're seeing it here in Florida. I spent time with some of the people in the economic war room yesterday on the phone going over all of this, and I think really this is a grassroots movement that is gaining momentum, certainly around the country. So it's exciting to see, and let's hope it gains some more traction. And rumors that I hear, and I won't substantiate them, but rumors that I hear is that there is actually a good chance, and someone that I would love to talk to, and certainly, Adam, you may want to try and get him on your show as well, as Representative Alex Mooney from West Virginia, who has passed these or tried to float these bills federally to remove capital gains taxes and to call gold, especially that gold that would be issued by the U.S. Treasury, the Eagles, money, and rightfully so. And for these bankers who claim it's unconstitutional, actually, they're wrong. The Constitution says it is treasonous to use any money that is not species, which is gold or silver. So it's, as usual, the bankers are self-serving and wrong. And guys like Alex Mooney, guys like you, Jason, and others who would much rather hold their money in something sound and stable. And let's not forget the overreaching risk that we see in an undercapitalized, over-leveraged banking system. Obviously doesn't want to see more of their deposits leave, but why would you leave your money in a banking system and in a currency that's being inflated, a banking system that's leveraged and undercapitalized and teetering and has bail-in legislation? I mean, it all seems that we're getting to that point. So yeah, I let's all hope. And this may sound corny, but hey, I suppose if you are in any of these states where they're considering it, and Jason, is there a spot to go to so people can see what states are considering this legislation? Because a simple contacting your legislature probably is a good idea if we are in any of these states where it is currently under, I guess you could say, review, or if it's in some sort of a what would it be, a panel or a council determining whether it's right for the state or not. Is there a place people can go to see where their state falls in here?
Yeah, I'm really glad you mentioned that, actually. The Economic War Room team set up a website called transactionalgold.com. That's transactionalgold.com. And it's very important, even in the states that have passed the legislation, that people get in touch with legislators and voice their support. I mean, for instance, in Texas, they didn't instruct the financial department to make this so, which is what they did in other states. In Texas, they have said that the comptroller, as they call them in Texas, has the right to be able to do this. And at the moment, there's a new candidate race that's just started because there's an outgoing comptroller of the currency in Texas. And so, I know that there are, I think, at least one candidate that's running his, ticket, so to speak, in wanting to support this. That's Don Huffines, I think he's endorsed by Ron Paul. But hopefully all the candidates will see that this was, as you say, a near, if not near unanimous supported bill and will want to get behind it. But in Texas, it's up to the comptroller to make sure this happens. So please get behind that. And as you say, in other states, the race is still on. In some states, I think it's Ohio, for instance, I think the legislative process is still underway this year.
Hey, Jason, did I get the URL right there for transactional gold? I've got scrolling across the bottom of the screen. Yeah,
that's right. That's it.
All right, folks. So if you're interested in that, go look at that. Maybe send it to your elected officials in your state and say, hey, we want to be part of this movement here. Jason, two questions for you here. One, one man's opinion, I'm skeptical. In other words, the banking system doesn't want this movement to succeed, likely for the reasons we've talked about. The banking system, hugely influential, hugely intertwined with DC, right? So it is kind of hard to imagine the banking system willingly saying, hey, yeah, let's let this happen, and let's have to live under the constraints that the system's going to place on us. Same thing for Congress, right? Congress people love the fact that fiat currency has removed the discipline that a gold standard once placed on our elected officials, and that budgets and deficits don't really matter because you can just continue to have the Fed invent more money out of thin air and finance the government, buy the government's debt if need be. So I do feel sort of like this is not something that's going to be like proactively pursued by the power structure. But we could definitely get to a point where there's enough grassroots opposition where we can force something about this, or probably more likely there's a currency crisis, right? And it cracks open the opportunity to look at this and say, whoa, wait a minute, we got to do something different, right? It's getting forced on the system. And what I value, just to echo what Andy was saying about you, what I really value about companies like yours, Winston Churchill had a great quote where he said, in a time of crisis, the option set that gets considered are the things that are already on the table, right? When you're in the threat of a crisis, you don't usually say, well, let's try something that's never been tried before. You say, well, let's look at the things that we kind of know and try to pick the best of them, right? And so what I see companies like you doing is trying to get solutions on the table now, so that if and when we get to that point where the system starts to break and they start casting around for a different way to do it, they can say, oh, well, you know what? There's actually this transaction platform that actually makes all this stuff really easy. We don't have to, it's removed a lot of the unknowns for us. So like Andy said, I just really want to give you, your full due as one of the pioneers out there trying to get really good potential new solutions on the table. So they will be there when and if we get the chance to look at doing things differently.
Well, thank you, Adam.
And I would like to chime in one moment. It's hard for me to keep quiet, Adam. You understand that, and I apologize. But
this is a three-way discussion, Andy. You come in anytime.
I've been sitting on my hand. I will say that I have devil's advocate in terms of perhaps the way the federal government looks at it, and I want to bring into focus Judy Shelton's argument of issuing 50-year treasuries, because as we said earlier, we have that $37 trillion debt, but the unfunded liabilities, Jason's point, in Medicare, Medicaid, Social Security exceed $175 trillion. By the government's own admission, we're pretty darn well near $200 trillion in debt. There's no way to pay that off. You bring in Doge, well, at least right now there's not, unless we were to bring all the manufacturing home and grow our way out of it, which would lead to the Great Depression long before we were able to grow. But just for a moment, if I would, and that would be that if we take a look at this massive indebtedness, obviously, and you bring in Doge who points to $2 trillion in reckless spending that we could save, but yet Congress doesn't have the political will to do anything more than $80 billion, and that $80 billion that they agree upon is 38 hours of spending by the government, amounts to nothing. So to Judy's point, in a world where the Treasury bond is losing demand globally, and that's not something that's even debatable, how do you find demand in a country where Trump wants to raise the debt ceiling? There's going to be another $3 trillion deficit. We owe $28 trillion in treasuries that are coming due in 3 years. Yet we only take in $5 trillion in tax revenue. He wants to lower taxes, but not lower spending. That's a problem. And even if you don't lower taxes and you keep it at $5 trillion, that's $15 trillion. We owe 28, but that doesn't take into account the $3 trillion this year and whatever we do the next 2 years in deficit spending. The math doesn't add up. So how do you find demand for the Treasury bond in that environment without letting rates go parabolic to attract that demand? If rates do go that high to attract demand, what happens to stocks? What happens to bonds? What happens to real estate? What happens to the banks? At 5%, they started to break. What happens at 10? What happens to the insurance companies who are loaded with treasuries? It's called bang, the Great Reset, everything implodes. So enter Judy Shelton. You reshore all the gold. Oh, wait, didn't we just say we become net importers of gold? I think we did. Over 100 billion that we know of. You contemplate revaluing gold. Where is gold held? Oh, yeah, in the gold revaluation account. That's the name of it. You can't make it up. It's happened 3 times before in this country. Who would that benefit? Well, that would benefit every central bank on the planet, number one. It would also benefit the United States government if indeed it is the entity behind this massive, massive, massive month over month over month over month imports of gold at record levels, the largest import ever into the history of the COMEX on the May contract. Who's standing for delivery for almost 9 billion in gold? You put all this stuff together. Okay, Judy, so we peg a 50-year treasury to gold. Why? Well, because what that does, if you do revalue it, now James Rickards says 24,000. He comes up with that number by taking the money supply and dividing it into the gold that hasn't been audited since 53. And he gets this 24,000, which would give the Treasury General Account 6 trillion free and clear. Treasury would issue gold certificates to the Fed, who would print the money out of thin air and give it to the Treasury. Those gold certificates give the Fed claim on the dollar value of the gold, not the gold that belongs to the people. So that printing of the money completely devalues the dollar, just like Nixon did in 72 and 3, and just like Roosevelt did in 33. Devalues the dollar, which is what they want to do, creates copious inflation, which is the lesser of two evils rather than default or hyperinflation, but it would create a lot. That makes it easier to pay off the debt, but that still doesn't deal with how do we get low borrowing costs. Well, we peg the Treasury to gold and redeemable upon maturity. Therefore, you can offer zero coupon treasuries because that inflation hedge is the gold. It's not the 8 or 9 or 10% yield that would kill the markets. Boom, everything blows up. Instead, you peg gold to it. You got a 50-year runway. And then in that environment, because of the low borrowing costs, you inflate your money to pay down the debt. The Treasury gets $6 trillion under Jim's scenario to start paying down the debt. And then you start reshoring your manufacturing at a very, very low cost of borrowing, and you try and produce your way out of it. In my opinion, what the hell do I know? I think it's the only way that you can get out of this quandary we are in without either massive hyperinflation, which leads to interest rates going to the moon, which blows it all up, or quantitative tightening, which has interest rates go to the moon, which blows it all up. I think Judy's onto something. I think that would be the first step, would be to reshore all the gold. We see that. So I think what Jason is talking about has greater legs than people would give it credibility for. I don't care what the banks have to say about this. We are so far down the road that we've really run out of options. Inflate, you're dead. Raise rates, you're dead. It's time to think outside the box and unconventionally. And I think that's what Judy's whole theory is all about. And I wouldn't put past really a reasonable chance of something like that happening. So I just want to throw that out there and play devil's advocate because I see a clear path to this getting crazier than people would ever think in terms of where gold will really go and what the plans are by the administration to use gold, not to back the currency, but to back the Treasury market to keep rates low and incentivize demand for the Treasury market.
So, Jason, I'll let you respond in just a second. I just want to note on that. So, I've interviewed Judy Shelton, and we talked about the 50-year gold-backed Treasury that Andy's talking about. And what was interesting, Andy, is when I was talking to Judy about it, I mean, really the sense that she thought it was the right thing to do, and it's something she's been pushing for a good while. But she sort of describes it as the camel's nose under the tent. like this would be a first incremental step towards a lot of the things that we've been talking about today. What I hear you saying, Andy, is it might not be the camel's nose under the tent. Like it might have to be the tent. Like it's the only way that you can see this working out. So this little quote trial balloon of hers, you actually think might be the answer that the government has to pursue.
I do. I don't think they can back it to the currency like they did in prior to 33, where gold backed M1, which was not M2, which is the broader measure. M1 is the currency in circulation. But President de Gaulle from France proved something, and that is that convertible currencies convert. That's like Gresham's law, where the bad money chases out the good money. And I don't think they want to make it convertible on a currency basis. I think they'll sacrifice the currency. And unfortunately, a lot of people will suffer with higher inflation. But I think the only way to keep the system alive and to have any hope of bringing back manufacturing and growing our way out of this problem, because remember, Triffin's dilemma says if you are the world reserve currency, you will always run trade imbalances.
Right.
That's why Vice President
trade deficits, but yeah.
Yeah, why the vice president is saying being the world reserve currency isn't maybe so beneficial at this stage of the game. So the only way you grow your way out of it is to back the treasury. And if you start with 50-year duration, you're not going to have everyone sucking all the gold away immediately. So you have a lot of runway to let the price really rise so that when it comes time to redeeming those treasuries, it's not as painful as it would be today. To me, it's the only pathway to keep United States hegemony and supremacy. For our growing indebtedness, you need to find an avenue to attract a demand for the treasury market without letting rates go parabolic. To me, it's a genius idea that Judy has, and I can't see a clearer path other than something like that.
All right. And Jason, I'll let you go here just real quick. I want to let folks know that I'll be interviewing Judy at some point next month, but more importantly, she's going to be a featured speaker at the Thoughtful Money Fall Online Conference, which is going to be Saturday, October 18th. So note your calendars for that, folks, and we'll have more details on that as we get closer. Jason, anything you want to add to Andy's exposition there?
Well, just to reinforce what Andy said, that actually during the first quarter of this year, we actually could not buy gold in America because everybody, someone was buying it all up, as Andy said. And so you had to, unless you were willing to pay $72 an ounce premium, we were having to buy it in London and fly it into America.
What he's saying, he's talking the big bars that never have that kind of premium.
No.
And where are premium now? Have they come down to historic norms? Or are they still elevated?
Yeah, they have, yeah.
Okay. So I'm curious then, was it all tariff front running, or was there something else going on? Like, Andy's point about an acceleration to repatriate.
I don't know, but I think it's a really good hypothesis, and I wouldn't want to argue against it. It was phenomenal. It's never, as Andy said, it's never happened before. I think the UK, as a result, UK's trade imbalance with the US changed because all this gold was coming out of the UK. I think there were headlines in the press here about the fact there was a 2-week wait to get gold out of the Bank of England. That's because the Bank of England is not a transactional vault. It takes time to get it out. It's not like a Brinks vault where it's going in and out every day. This was extraordinary. Extraordinary. The gold, and it wasn't just coming from the UK. The people with someone in America was trying to buy this from all over the world: Australia, Singapore, London.
And I think that the tariffs was a ruse. It made perfect sense, and that was the cover. If they knew that the U.S. government was trying to accumulate it for reasons just like this, then again, front running galore. Instead, you cite tariff reasons and you cite arbitrage reasons where it was you could make more money by taking delivery in the United States. I think that's all hogwash. I think that was a cover.
Don't let a good crisis go to waste. That's what you're saying. Right. Yeah.
No, I just think it was a cover in order to bring that home, because if they said we're going to reshort because we think we need to back the treasury, that would not be a wise move. But if everyone thinks it's to front run tariffs and it will just end up going right back down the road, well, that's different. And I think it was a mistake. I said that since day one. This is far bigger than just tariffs, because the amount of imports, not just of gold, but silver also, are so far outside what is normal that I think it speaks well more than just tariffs or arbitrage. Far more. But that was a good cover for it.
All right. Well, Andy, you certainly got folks' attention with this. I know you and I were talking a tiny bit about this hypothesis of yours right before we hopped on here. Glad you got it out. I'm sure we'll want to dig into it a little bit more depth.
Yes.
Let the audience themselves ask questions about it. We'll try to do that one of the next times you come on. Gents, we're going over the hour here, so I need to start winding down. But we'll go a few more minutes if you guys don't mind. One, because I did mention it earlier, and I've seen a couple questions about it, so I feel we just need to reach out and grab that rail, third rail or not. But Bitcoin, Jason, I know that you're a huge fan of specie bullion for all the reasons you mentioned, and you've got your company totally aligned around that. A lot of Bitcoiners would say, "Hey, guys, this is what Bitcoin does too. Where's Bitcoin in this? Or maybe Bitcoin's the superior solution." Recently, there's been a lot of talk about stable coins, and people saying, Andy, that's how they're going to support the treasury market, which is that all these new stablecoin providers are going to need to back those stable coins with treasury bonds, and so that's going to be providing a bid for them. How do you see Bitcoin playing in this ecosystem that we've just spent the hour talking about? Jason, let's start with you.
Well, I think that I'm a big proponent to the whole digital cryptocurrency universe, and I'm not like one of these people who wants to have a war of words between gold and crypto. I think they're two very different things, and both have their benefits and their challenges. Cryptocurrency, but for instance, Bitcoin is currently a risk-on asset. We saw that when Russia invaded Ukraine. The price of stock markets and crypto tanked.
Right. Sorry to interrupt, but by the way, Bitcoin hit an all-time high just a couple of days ago. The day we're speaking, it's up several percent. It's back close to 120,000 a coin. So it's risk on or not, it's doing great right now.
Yeah, it is, and I've got nothing against it at all. But I just want to say it's very different to gold. Gold is the thing that's being held by central banks. It's overtaken the euro as being the second reserve currency on the planet. So it is a tier one asset. It's written into the constitution, and I think it's fantastic that this administration is getting behind making it very clear what businesses and platforms and entrepreneurs can do with cryptocurrency, because I think it was an absolute crime the way the last administration was behaving towards cryptocurrency. As an entrepreneur, I know what it's like to be building, how hard it is to build innovative new 0 to 1 businesses, and to have the rug pulled from under your feet, at a moment's notice, or to be worried that you might do because of an administration that doesn't want to tell you what the rules are, but is happy to use the rules against you, it goes against everything about entrepreneurship, building great capitalism, all of that stuff. But the reality is that in the Constitution, unless there's going to be, as you said, a change to the Constitution, there's only gold and silver that can be made legal tender. That's just a hard fact, and it's also a hard fact that gold is accepted by everybody on the planet and has been throughout time and space, and still is. Lots of people don't like cryptocurrency, even though it's doing particularly very well. But gold, if I offered gold to anybody on the planet, they'd take it off me. It is the universally accepted store of value. It is the currency of last resort. But that's not saying anything against cryptocurrency. Crypto is great, and I'd love the two ecosystems to be interchangeable. In fact, we're just waiting for various rules and regulations to be clarified so we can build a bridge between Glint and the crypto universe, that people can be able to move from a digital store of value into a physical gold one that can still transact. I mean, there should be choice on this planet. This is why the legislators are saying this is not, this constitutional gold stuff isn't replacing the dollar. It's a choice, and you should have the choice to be able to move into cryptocurrencies too. As long as things are being done properly, then the ecosystems should be able to flow from one end to the other.
Okay, Andy, any concluding thoughts on this?
One of the things that Judy said when I interviewed her as well, Adam, was that she would envision stable coins issued off of this new gold-backed Treasury. Stable coins are a way to increase demand for U.S. Treasuries and not be inflationary, right? So you're creating that, you're not creating dollars, and you're really not even creating demand for dollars, you're creating demand for U.S. Treasuries. So all these people who think they are leaving the legacy system, actually in a weird sort of way, you want to think PSYOP, you want to think misdirection, they're actually supporting it. Maybe this is why you're seeing such bipartisan support for these bills, because they understand that the demand for the Treasury, the natural organic demand, is dying. So let's create the cryptosphere and then peg it by U.S. or peg it by, stable coins being backed by U.S. Treasuries. It makes you think a little bit. And when I think about Bitcoin, I did an interview with Paul Barron, and I asked him about this, and he said he was very scared. All you got to do is Google Willow chip. That's made by Google. It's called the Willow chip. It is the quantum computing. It does in less than 10 minutes what the world's fastest supercomputers can do in 10 septillion years. Now, I didn't even know what septillion years was. It's like 10 to the 26th power. It's so far down. I mean, it would take a million lifetimes for this to happen. Yet this new chip, bang, done. And I worry about anything that's in the digital sphere. And you wonder, it's like the further we go down this digital road where quantum computing becomes so extreme, is anything safe anymore that is digital? And you have to stop and wonder, if it can do that many computations in what the world's fastest supercomputers take 10 septillion years, how safe is anything like that? But gold in a vault, tier one asset held in a vault, you don't have to worry about being hacked, if you will. So I'm not saying that I don't think that there's a role for Bitcoin. There is, but as it backing the sovereignty of the government, not quite sure. As far as stable coins are concerned, yeah. And you have to think, is that really something that they want, or is it something that they know that they have no choice? How do you find demand for U.S. Treasuries? Well, you back it by gold and you issue stable coins, because you're losing organic demand. So let the world buy cryptocurrency and trade throughout the ecosystem in dollar-based stable coins. You are supporting the legacy system. There's far more layers on all of this than it's just simplicity. Yeah, that'll do it. Well, you have to think about the motivation of those that are allowing that to happen. And I don't know, maybe I'm a little more cynical, but it is my mission, and has been, especially bringing Michelle on, to unite the two communities. We have far more in common than we do not, and we should be together rather than decisive. And this mutual exclusivity is silly. I think that we see the world in many ways somewhat the same. But the Bitcoin community wants to profit. We want to preserve. But together, our portfolios and our arguments are much stronger.
Okay. And yes, it's all under the sound money umbrella. So we'll have to leave it there, gentlemen, just for time. But these are big issues, folks. They are in process, which is why we'll have Andy on every couple of weeks, and Jason on as often as we can get him here to join us. If you've enjoyed having both these minds on today, please let me know your feedback in the live chat there, or in the comments if you're watching the replay. Obviously, we want to continue to deliver the type of experience that you guys value most. So as we start to wrap up here, Jason, like I said, we'll have you back on at some point to do a real deep dive into Glint. For folks that want to learn more about it between now and then, where should they go?
The easiest thing to do is go to glintpay.com. Or just download the app from your favorite app store. It's easy to set up within just a few minutes, and you can try it out yourself.
Okay, wow, very concise. All right, and Andy, want to reiterate that you are the Miles Franklin is the official endorsed precious metals solution by Thoughtful Money. So for folks that want to get some help from you and your team in thinking through if they want to start or advance their exposure to precious metals with their own personal wealth and get some help in thinking through that, where should they go?
Best way, especially for your listeners, is info@milesfranklin.com. Send us an email. Make sure you came from Adam. Any questions you've heard here, or any of the interviews we've done, or any questions on your mind, from macroeconomics to physical metals or anything in between, we will make sure that we send a price list. If that's all they want, just say, I want the price list. And we will make sure your listeners are getting the best price in the country, personalized white glove service. And if you don't get a reply back fairly quickly, check your spam. If you want to be contacted, put your phone number down. But info at Miles Franklin, saw it on Adam Taggart, and we treat those leads, those client requests, as the most important thing in the world. And I'm sure that we'll be able to prove that pretty quickly to your listeners. So info at milesfranklin.com would be the best way.
All right. Thank you, my friend. Folks, that's on the screen right there, but also I have the links both to info at miles.franklin.com and GlintPay in the description below this video. Gentlemen, it's always a privilege to have you here. Folks, if you have enjoyed this, please let Jason and Andy know by hitting the like button and then clicking on the subscribe button below. As I've been saying recently, we're trying to hit 150,000 subscribers for this channel by the end of the month, which is my birthday. It would be a great way to celebrate. But also it helps you because you'll get alerted every time there's a new video here, so you won't miss them, hopefully. But it also really does just help the Thoughtful Money movement because the more subscribers this channel has, the more love that the YouTube algorithm shows this channel in sharing these educational videos with other like-minded investors like you. Gentlemen, such a pleasure. Can't thank you enough. Really look forward to having you guys back on soon.
Likewise. Good to see you guys. Good to see you, Jay. I think I'm going to grow a beard next time so that these 3 pictures in a row look even better.
That'd be great.
Thanks, Adam. Nice to see you again, Andy.
Adam.
All right. And everybody else, thanks so much for watching.
That we're still at above 2.5%, close to 3% in the U.S. inflation, consumer price acceleration rate, and the interest rate has been being cut since 2024. You can see gold is rising because of that or in tandem with that. So now we are in an environment where, first of all, the Fed is going to cut into accelerating consumer prices, and they're going to cut into an accelerating gold price. That was not the case. This is going to be much worse for the dollar, and it is going to be the end of it because the debt is so much higher now. The end game is coming. It is coming soon. And this time is going to be much worse than 1980 for dollar holders and much better for gold and silver holders because this time the gains of 1980 will be held and exceeded.
U.S. inflation remains near 3% while the Fed continues cutting rates, pushing gold higher alongside rising consumer prices. This policy shift is set to hit the dollar hard, given today's much larger debt levels. Analysts warn the endgame is near, worse for dollar holders than in 1980. But far more rewarding for gold and silver investors, as this time gains are expected to be sustained and even surpassed. Rafi Farber, known as the Endgame Investor, is a financial writer, investor, and precious metals analyst. Recalls that back in 1980, the Fed fought inflation by targeting monetary aggregates, money supply growth rather than just consumer prices. With debt to GDP at only 32%, they could hike rates aggressively, eventually taming inflation and stabilizing the dollar. Today, however, debt to GDP is near record highs at around 120%, leaving no room for similar rate hikes. Instead, the Fed is cutting rates into rising consumer prices and a rising gold market. Unlike 1980, this environment signals a much weaker dollar and far stronger prospects for gold and silver, with gains expected to surpass those of the past. Remember to hit the bell symbol and subscribe as we begin the videos so you don't miss any updates. If you like the video, please leave a comment below and give us a thumbs up.
They wanted the monetary aggregates is the M1, M2, M3 money supply. This is back at the time when the Fed was actually trying to control inflation in a classic sense. Inflation meaning the amount of dollars over the gold supply, how much the monetary aggregates are actually rising. That is inflation in the classic sense, just as they changed the inflation to the effect of inflation, which is the effect on consumer prices, just as they changed the definition of vaccine to what it was before and what it is since COVID. I'm not going to go into that now, but it's the same kind of Orwellian nonsense. But this is back when the Fed actually was not actually fighting inflation, but trying to control inflation, meaning the actual monetary aggregates, the money supply numbers, not the effect on prices. They didn't care, not that they didn't care. It wasn't their primary goal to change the effect of prices, of consumer prices. They knew that if they attacked the monetary aggregates and controlled the expansion of the monetary aggregates, they would, by extension, control consumer prices, which they did in the end, which is why we still have a monetary system as it was in 1980. So basically, at this point, the Fed is jacking up interest rates in order to control monetary aggregates. And we can see here by this chart when they hike into the maximum, exactly when this is, I think this is early 1981 or something like that. Once they see that the monetary aggregates are within the growth ranges that they prescribe, then they get control over consumer prices over here in the red, and they get control over the gold price. But this is, of course, not their primary goal. They want to control the monetary aggregates, which will control the consumer prices, which will also control the gold price by extension. And then they start cutting rates once they see that this is under control. The other reason why this is not a 1980 situation is that you can see the debt to GDP ratio. I know GDP is fake, but this is still a general relative number that does convey some information. The debt to GDP ratio in 1981, when interest rates were at a maximum, was 31.8%. This is, I think, an all-time low since Andrew Jackson, maybe. Maybe I'm exaggerating that. I didn't look into the 19th century. I can't find statistics for debt to GDP ratio in the 1800s, but you can see that this is the lowest debt to GDP ratio. This is precisely when gold was topping and when inflation, consumer price inflation, was topping out. This is why they could jack up interest rates so high, because the debt was so low by comparison to any other year from World War II, at least before World War II, the Great Depression, until now. That is why 1980, the dollar survived that turbulence. But now, of course, we are at 120% or whatever it is, the very, very near an all-time high in debt to GDP. There's no way that they can raise interest rates now, which is why they're cutting it, and they're cutting it into rising consumer prices. You can see here, this is the chart of the interplay between the U.S. inflation rate. Inflation, I mean in quotes, not really the inflation rate, but the consumer price acceleration rate. And gold you have here, I don't know why it's not in gold. What is that, gray or green or whatever the hell it is? And you have here the blue U.S. interest rate, the federal funds rate. And you can see here that we're still at above 2.5%, close to 3% in the U.S. inflation consumer price acceleration rate. And the interest rate has been being cut since 2024. You can see gold is rising because of that, or in tandem with that. So now we are in an environment where, first of all, the Fed is going to cut into accelerating consumer prices, and they're going to cut into an accelerating gold price. That was not the case in 1980 at all. So people that say you can't compare to 1980, this is not that situation, stop using those ratios, I agree. This is going to be much worse for the dollar, and it is going to be the end of it, because the debt is so much higher now. And unlike 1980, when they were cutting into a falling consumer price inflation environment, now they will be cutting into a rising consumer price inflation environment. And while debt to GDP was so much lower in 1980, it was lower than any time before World War II since the Great Depression. Now it is at an all-time high. There is nothing they can do. They have to cut into rising consumer prices because the debt is so high. Where in 1980, they didn't have to do that, and that's why they saved the dollar, and that's why they will not this time. So forget about the Hunt brothers. The end game is coming. It is coming soon, and this time is going to be much worse than 1980 for dollar holders, and much better for gold and silver holders, because this time the gains of 1980 will be held and exceeded.
Rafi Farber points out that in 1980 and 81, U.S. inflation and gold prices were surging while the Fed raised interest rates aggressively to regain control. After briefly cutting rates, they were forced to hike again up to nearly 15%, when money supply growth ran hotter than expected. Only once inflation consistently declined did the Fed start cutting rates steadily, which helped stabilize the system and prevented the collapse of the fiat dollar. Now let's review the interview.
And so here we have a chart with three colors, blue, red, and some kind of yellowish, greenish, orange, whatever blah that is. You can tell me later in the comments how stupid I am at colors, but whatever. My eyeballs are my eyeballs. What can I do? So this one, which I think is the red one, is the U.S. inflation rate. This one, the blue one, is the gold price. It's not exact. And this one over here, this wobbly one is going down over here, and then back up. Blah, 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 blah. That is U.S. interest rate, meaning the Fed funds rate. Now, what was going on here in 1980? What was going on was that interest rates were going up and up and up and up because the U.S. inflation rate, the inflation in quotes, the inflation rate, meaning consumer prices were rising. They were rising and rising and rising. And so the Fed was raising and raising interest rates, but not quite. We'll go into why not quite. That's not what was happening in the next slide. This was a situation where interest rates are rising, gold was rising, the inflation rate, the consumer price inflation rate was rising. And then you have this period here where they were cut, the interest rates were cut back down here to whatever that is, I think 5%. And then they were jacked right back up to about 13, 14% right here. And we'll see exactly why this was in a second. But you can see here that the Fed was trying to quash consumer prices, not exactly consumer prices, but we'll see why in a second. They were trying to quash something else. And as they were doing that, finally, when they got control of the US inflation rate, when the red line started going down, that is when they consistently started cutting rates over here in this greenish, yellowish, whatever line that is. And you can see here that the gold price was falling with it as well. What I'm trying to say here is that back in 1980 and 1981, the Fed was raising rates, trying to quash consumer prices, and only once they accomplished this goal and they saw that the inflation rate was falling consistently, only then in 1981 did they start cutting rates on a consistent basis as consumer price inflation was falling, as the acceleration in consumer prices were falling. So in other words, the Fed already had control of the inflation rate when they started cutting on a consistent basis. That's what happened in 1980, and that is why, one of the reasons why, the fiat monetary system did not end in that year. This is not really a chart. This is a transcript. I will give you the link in the description below as to exactly where you can find this thing, and it's on page 7 of the PDF that I found it on at the Federal Reserve's website. This is to a staff analysis, says the Federal Reserve Board. The demand for money had been quite strong in recent months because of recovery in economic activity and in nominal GNP, not GDP, GNP, slightly different, had been much larger than anticipated. Growth of transaction balances was projected to slow significantly over the remainder of the year, in part because of the lagged effect on the demand for money or of the sharp rise in interest rates over recent months, and in part because of the apparent weakening of the recovery in activity. In the committee's discussion of policy for the period immediately ahead, the members generally favored pursuit of a sharp reduction in monetary expansion from the rapid pace of recent months. And so, if we go back to this chart over here, this is November of 1980 when they started to raise rates again after cutting them over here. This is 1980s around here where I'm circling when they started to raise rates back up to the maximum around 15%. Why did they do that? Because they saw that the monetary aggregates were rising at a faster pace.
Unlike 1980, when the Fed had the flexibility to crush inflation with aggressive hikes, today's debt-heavy environment leaves policymakers with fewer tools. Cutting rates into rising inflation risks undermining the dollar while fueling gold and silver to new heights, suggesting this cycle could deliver far more lasting gains for precious metals. Could today's debt levels make it impossible for the Fed to repeat the 1980 playbook? How high might gold and silver climb if the dollar continues to weaken under current policies? Please feel free to leave a remark below with your thoughts. Please give this informative video a thumbs up and subscribe to receive our most recent updates. Thank you for joining us on this trip.
Are likely going quite a bit higher on gold from here. And the fact is it's just the basis of the government is going to continue to spend. The Fed is continue to do what they've loved doing for ages at this point, which is printing money essentially and flooding the system in any downturns. And that is going to fuel gold higher. I would not be shocked to see 3,800. Now, that's not the cycle top, but I think 3,800 is likely your upside parallel trend line of resistance. So I think by year end, 3,800. And then I think you're talking in the next couple years well over 5,000. And silver, we know, has lagged gold. I do think it's playing in the process of playing catch up. Basically, I'm expecting it to have a small stop at $44 per ounce, but really likely headed to about 48 to 50.
Gold is anticipated to increase in value as long as the Fed and government continue to generate money. It may hit $3,800 by the end of the year, and in the upcoming years, it may surpass $5,000. The Central Bank of Poland, NBP, is taking steps to raise the percentage of gold in its overall reserve assets from the present level of roughly 22% to 30%. Poland is already one of the world's most active gold buyers in 2025. It reflects a strategic shift toward de-dollarization and lessens dependency on the US dollar by increasing gold reserves. Although it might see a decline after reaching that level, silver, which has trailed behind gold, is expected to increase toward $48 to $50 an ounce. Gareth Soloway, a seasoned trader and technical analyst, points out that gold is expected to stay well supported, unlikely to drop below $3,400 to $3,300, and could reach about $3,800 by year-end. UBS raised its end 2025 gold target to $3,800, citing anticipated Fed rate cuts, a weakening dollar, and rising geopolitical risk. Countries like Poland and China are boosting gold reserves, showing a steady move toward de-dollarization. China has expanded its gold reserves for 10 consecutive months, reaching 74 million ounces by August 2025, about 7.6% of its FX reserves, while also streamlining gold import rules to ease trade. Poland remains a leading buyer, adding 12 tons in early 2025, surpassing the ECB's holdings. Analysts see both moves as part of a wider de-dollarization trend, with surveys showing more central banks planning to boost gold reserves as a hedge against dollar volatility. Gareth believes this process won't happen overnight but will gradually weaken the dollar. As we dive into the video, don't forget to hit the bell icon and subscribe so you don't miss any updates.
I have a hard time believing gold would pull back lower than, let's say, 34 to 3,300. There's just way too much support now in this chart, in this zone, that as long as it holds there, you're buying it, at that pullback level. And that's exactly what I plan to do. So again, yes, in the near term, I'm a little like, again, if you say, well, where do you see gold in the next 2 weeks? I think gold comes down. I think it pulls back, natural occurrence. But if you ask me in 6 months, is gold higher? I do think gold is higher. Now, a lot of people are always asking, okay, well, what's your upside cycle target? Well, where could this go in the interim for upside? And I think to do that, what you do is you use what we like to do in the technical world is you use essentially a parallel channel, right? And we start to look at parallels here. And I would say by end of this year, I would not be shocked to see 3,800. Now, that's not the cycle top, but I think 3,800 is likely your upside parallel trend line of resistance. So I think by year end, 3,800. And then I think you're talking in the next couple years well over 5,000. I think Goldman is pretty much dead on at this point. I love what you mentioned about these countries. Poland just announced again 30% of their treasury is going to be gold. I think the important thing is that we're slowly seeing this de-dollarization. And again, when people talk de-dollarization, especially in the crypto markets, they're like, oh, it's going to happen overnight. Reserve currencies, if you look historically, that never happens. It's a longer process, but we're seeing the writing on the wall. China just continues to buy gold. Poland now is going to do a portion. And essentially what they're telling you is that they don't feel comfortable with the power that the U.S. wields because they have to rely so much on the dollar. And so they're slowly diversifying away, which will slowly weaken the dollar over time. And in fact, the dollar chart is telling us exactly that. In fact, I want to go over this chart because the DXY chart is really, really telling. So if we go to the dollar chart here, what we've seen is a key breakdown in the US dollar here, and I'm going to just draw this in for you guys. So there was this trend line zone that was holding on the US dollar for the last basically 2 to 3 years. And you can see again, going back to 2022, we would hit, and every time we hit, we would bounce on the dollar. All of a sudden, we broke below. Now it becomes resistance. Remember, support, once support breaks, it becomes resistance. And now up it goes, rejected. Up it goes, rejected. Now the concern I have here on the US dollar is if we flip to a longer time frame and we go back to 2008. And by the way, 2008 is not an arbitrary date. It is when the financial crisis started. And so if we take a trend line from there and we drag it up, the dollar has a very distinctive trend line that basically goes from 2008 all the way to the current lows. My point being, if the dollar breaks this level around 96 to 95, that would be a major technical chart breakdown. And I would say, listen, again, I want to be clear. It doesn't mean it's going to collapse overnight, but I would actually think the dollar would head within the next, let's say, 5 years down to 70 on the DXY. And 70, I mean, that would be shocking to see for all of us.
Gareth highlights that gold and stocks have both been hitting new highs, but history suggests this won't last. Gold is likely to hold up better thanks to dollar weakness, central bank buying, and investor demand, while the stock market could eventually give way. Silver has broken out of a long wedge pattern and is catching up to gold, with potential to reach $48 to $50 per ounce before facing strong resistance. If it consolidates at that level, it could set up for a bigger move higher, but a sharp reversal would be bearish. On the macro side, silver is supported by rising demand from industries like combustion engines and by sovereign funds diversifying beyond gold to avoid over-reliance on a single asset. Let's recall the interview.
Yeah, so I think the big macro signal is this, right? Is you have two scenarios. So number one, the stock market and gold have been making new all-time highs consistently together. That does not last. If you look historically, it can last for short periods of time, but it's telling you one of them is not going to last. And in this case, I believe gold, yeah, while it might have small pullbacks, gold is going to be the one that is going to outlast, whether it's weakness in the dollar, whether it's the labor market and people running for the safety, whether it's global central banks that continue to buy gold, or these countries that are going to continue to buy gold. Gold is becoming that place to go, along with Bitcoin to a much lesser extent, where money is flowing. And again, if that's going in that direction, that's not good for the stock market overall. So that's a big one that I'm following. And again, keep this in mind. Watch for a break of trend from either gold or the dollar, gold or the market. And I do think the stock market will give way as the data continues to weaken here. You to like silver here, you can see you had this beautiful wedge pattern right here. And again, this wedge pattern, look at this trend line, how every time going back to 2023, every time it hit, it pulled back, pulled back, pulled back, pulled back, and then pulled back recently in 2025 twice. And then what it does is it gaps above. It's like, okay, I can't walk through this river because it's the rushing river will take me away. So let me hop over. Let me take the bridge over. And all of a sudden it breaks out, consolidates. This is a bull flag, and it's beginning to move higher. So this is a breakout on silver. And silver we know has lagged gold. I do think it's playing in the process of playing catch up. Basically, I'm expecting it to have a small stop at $44 per ounce, but really likely headed to about 48 to 50, which would then, if we go to the bigger time frame, 48 to 50, where does that take us? Back to this high here, 1980 and the 2011 highs. Essentially, that would be called a triple top, and that would be expected to be resistance. Yeah, so you basically look to sell it to $48 to $50. So if silver gets to 48 to 50, I would expect it to pull back. Now, it could eventually break out, and that's what I would start to watch. And let me just do a quick teaching on this. So if you have silver, right, and silver, let's say, rips up to 48 to 50. Let me get my drawing tool out here. So let's say we rally up here. You then watch, as a technician, you watch to see what it does off of this level. What you want it to do is basically go sideways to lower, which creates a bull flag. It's essentially digesting. Think of a marathon runner who just ran a marathon. They're exhausted. You can't be like, go run another marathon. They're going to be like, no way, I need to refuel, I need to sleep, I need to rest, I need to eat. This is what this is. It's consolidating, it's refueling, and then you get your big move up. What you don't want to see is you don't want to see a sharp reversal. A sharp reversal would be bearish. So as a technician, if let's say we get to $48 to $50 an ounce on silver, I will then begin watching what price does around that level, and that will give me insight into the next likely move. You know, silver is going to be seen as obviously the macro, driver of combustion engines, which are now becoming more and more popular again after the EV kind of had its phase. And I still think EVs are in that direction, and they will continue to grow, but not nearly as much as people thought. And so I think you have that aspect to it. But I also think that you're looking at, there's these sovereign funds in these countries that are saying, okay, gold has had this massive run, and just like the dollar, we don't want to just be in one metal. Like, what if something happens and there's a massive find of gold? Let's diversify. And I think, again, what's so interesting here is that these countries are learning from their mistake with accepting the dollar as the major reserve currency, where it gives the U.S. way too much power. They are not comfortable with that.
With long-term goals above $5,000, gold is still on a solid upward trajectory bolstered by Fed policies. The robust gold purchases by China and Poland point to a larger trend toward de-dollarization, whereas silver, albeit trailing, has the potential to make large gains if it can maintain momentum. Although the dollar's collapse will be slow, Gareth Soloway emphasizes that these tendencies indicate a shifting financial landscape. Will the increase continue to be steady, or may central bank gold purchases accelerate prices even more toward $5,000? Will silver risk a steep reversal or consolidate for another breakthrough if it encounters resistance at $50? If you enjoyed the content, please like this video, subscribe to the channel, and press the bell icon for timely updates. We appreciate your support, and we thank you for being with us.
I think silver is going to explode to the upside. As this chart I know you're going to show, going back 50 years in silver, there's been a 31-year formation of what we call a cup and then an 11-year handle. Now, if you remember a couple of years ago when you and I first started speaking, one of the bullish things about gold back then when it was under 2000 was it had an 11-year cup and handle formation that was ready to be taken out. And cup and handle formations 8 out of 10 times break to the upside, not to the downside. Well, silver, as you and I are literally just about to break out above the handle, which at 40 or more would clearly break out. Taking that just from the technical aspect of that, you could argue from that formation, minimally, and I say this minimally, and I'm watching myself say this, Elijah, thinking I can't believe Pete Grandis is saying this, but I think silver could be triple digits. That means it's going to go to $100 or more.
Silver is currently experiencing a significant technical breakout, forming a rare and bullish cup and handle pattern that has been developing over approximately 31 years. This pattern, characterized by a rounded bottom followed by a consolidation phase, suggests a potential upward move upon breaking through the handle's resistance. Analysts are closely watching the $40 level, as surpassing this could trigger a substantial rally. Some experts like William Middlecoop and Robert Kiyosaki project that silver could reach $100 per ounce or more in the long term if this breakout materializes. Peter Grandich is a financial analyst and commentator specializing in precious metals and resource investing. He remains very bullish on both gold and silver, especially silver, which he previously considered secondary to gold. Earlier in the year, when silver dropped below $30, he shifted to a strongly bullish stance. But noticing the current situation, First Majestic Silver projects silver prices could reach $100 to $130 in the long term, citing structural supply-demand imbalances. Peter highlights that silver's long-term cup and handle pattern signals strong upside potential, while gold has broken out of a long-term inverse head and shoulders pattern around $2,075, rallying above $3,350 by August 2025. Strong monthly closes and limited retracements reflect robust buying interest and a shift in market sentiment, supported by macroeconomic factors. The gold-to-silver ratio shows gold currently leading, but Peter sees both metals poised for significant gains over the next 12 to 24 months. The excerpts from Peter's interview are now available. Please click the bell symbol to receive timely updates, and subscribe to our channel before we continue our conversation. Thank you, and have fun watching the video.
I still believe gold and silver are going higher, particularly silver, which is anybody that knows Peter Grandis from just past a few months ago say, did Peter Grandis just say he was bullish on silver? Because I always treated it as second class to the gold itself in terms of ownership. Not that you shouldn't own it, but, there's been people for silver for decades and, it underperformed quite a period of time. However, early in the year when it got below 30, I flipped the switch and I became as bullish, if not more bullish on silver and gold. And I'll touch on that in a moment. But the first important thing is, so earlier in the year, after owning gold for as cheap as $1,300, when it got up to its highs or within $20 of the highs, I made a decision that the major producers now could do better than the physical gold price. Plus, gold needed to go through a very long consolidated phase because of how fast it rose in the previous 12 to 18 months. So I went into the major gold producers. Then when they did as well, and they're going to continue to do well, they're basically record amounts of free cash flow in the sense they're printing money. The bottom line then was, well, the next order of business is, you have all these folks on Wall Street telling us about AI and all these centers and all these needs. Well, they need two things. They need electrical power, which we have a huge problem. You know how I feel about the grid and the inability to deliver power. But it also is going to need a whole bunch of metals. And that's why, another metal that I like very much is copper. But there's been such a lack of worldwide exploration for these metals. The world has shrunk to where companies are willing to go because of economics and social and political causes. So I backed up the truck, so to speak, in the most riskiest of the type of stocks, what we call junior resource stocks or exploration stocks. But I want to say one thing about it. Gold and silver are just trading the best you could expect at this point in time. See, there was always an excess 20 or 30 years ago. There isn't that excess now. And the other thing is it has so much more demand and usage from an industrial usage. It's still not a monetary. I know there's a few people are trying to argue that. The central banks are not buying it in any large quantity, although out of the Middle East, we've seen a significant purchase, and that may be changing. The ratio is another reason it got way out of whack. Not that it has to be any certain ratio, but if you're going to use historically, it seemed to be favorable. And then it's just that chart. I mean, that chart, there aren't a lot of technical charts that have outstanding 8 or 9 out of 10 times it works a certain way. Cup and handles, especially the longer they are, have about an 80% correlation of that when it breaks the handle to the upside, they go up substantially. So all those things combined, and throw in the fact that the things that have been competitive against gold and silver, the stock market and crypto, they look like they're peaking. So 12 to 24 months out, they could be in a much better environment than they did previously. And I will tell you this, if we're right about the technicals, I'm not saying it's gonna, but if we're right, we're going to see momentum players show up. And when momentum players show up and the charts really take off, then all these generalists are going to get calls from their institute. How come we don't own any silver? What can we own? And you know how I know that? In the last 3 weeks, maybe the whole month of August, I heard from 10 people that I haven't heard from in 10 or 20 years. In fact, they thought I was already out of the business because I left the metals and mining business in 2013. But they saw me somewheres and all, and they're starting to go, hey, I'm starting to hear from people that know what they're talking about. What are you looking at? And I just think if we get this breakout and it's being talked even in the general financial media, the fundamentals and the supply and demand argument is so bullish. So that's why I'm so optimistic.
Peter emphasizes that gold still has significant upside potential, despite already rising substantially. Gold has entered a new bullish phase. The breakout from the long-term consolidation pattern signals strength backed by strong technical and market momentum. This suggests continued upside potential, especially if macroeconomic conditions remain favorable for precious metals. At the same time, the gold-to-silver ratio continues to show gold's dominance. The ratio remains inside a rising channel, currently holding near 90. This indicates that silver has yet to catch up, and the market continues to favor gold in uncertain times. However, the ratio's midpoint is a potential turning zone, so traders should monitor closely for any signs of silver strength. Gold remains strong with long-term bullish momentum, while silver may be approaching a turning point based on the current ratio. Investors should monitor key support and resistance levels for potential moves. Peter also advises caution with U.S. stocks, recommending a focus on international markets, particularly China, as global equities and precious metals have outperformed, and seasonal trends suggest potential weakness in the U.S. market from September into October. Let's dive into the interview.
Well, gold's moved up a lot. How much further can it go? How could it possibly go to 5 or 10,000? So when I first thought about coming in the early 1980s, when I effectively became a stockbroker in March of 1984, The Dow had gone 13 years trading between 700 and 1,000, to the point where in 1982 or 83, Business Week ran a front page story which everybody on Wall Street spoke around called Equities Are Dead. They literally, along with many others on Wall Street, viewed that just because of everything that was happening in the world and how bad things were, and Russia and the United States are going to blow each other up, Japan was going to take over the world back then, yada, 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 the Middle East. They didn't think it was possible for the Dow to go much above 1,000. And then a young man who ended up helping me a lot in my career, who no one heard of beforehand, came out of Gainesville, Georgia, named Robert Prechter Jr., with something called the Elliott wave theory, which no one was familiar with, and said, the Dow's going to 3,600. And the few people that put them on financial shows, they just put them on like you were putting on like a clown to show how what an idiot this guy. How could the Dow go to 30? I remember people going, sir, how could it's never been above 1,000? And he would give the reasons and so forth. It went a lot further. It took decades, but it went a lot further than 3,600. And so I think it's a mistake to just simply say gold can't be 5 or 10,000 because it traded for so long between such and such a price. We have no idea or argument about that and so forth. Just recognize that right now, the vast majority of people, certainly in North America and particularly in the United States, don't own any. None. Not a mining stock, not physical bullion, nothing. And if that half or 1% or wherever it is, it's somewhere in that range, just switches to 2% of their portfolio, the numbers are incredible what they can get to. So that's one of the many, many reasons I think it's still important to stay very constructively bullish. And I don't believe I could start a general equity portfolio now in U.S. In fact, when I began the year, Elijah, I suggested to our clients of our planning group and anyone that wanted to listen that if you are going to own equities that are ex-U.S. equities, meaning world funds that don't hold any U.S. exposure. And in particular, a country like China that I thought would outperform the U.S. And both of those have greatly outperformed the U.S. stock market. There's a lot of excitement now, and I know I'm going on here, but because we went down sharply briefly in April and had this rally, there's a sense that this has just been a magnificent year. But right now, the U.S., despite all of this, has not been able to outperform world markets, emerging markets, China, and best of all, it's not even come close to gold and silver. Yet, if you turn on a financial network, that's all they talk about is the U.S. market. So all of that led to this belief, but because the last 2 weeks in August tend to be extremely seasonally bullish because people are taking their last of their vacations and all, I said not to worry about a defensive position until after Labor Day, which ironically, we begin one of the more seasonally weak periods for the stock market, September into October. So all in all, I think it's the greatest minimum now. You need to be much more concerned about the U.S. stock market now than you might have been a few weeks ago.
Peter Grandich underscores a bullish outlook for both gold and silver, with silver showing a rare long-term cup and handle breakout, and gold maintaining strong momentum after a major inverse head and shoulders breakout. While gold currently leads, silver's technical setup and potential inflection in the gold-to-silver ratio suggest significant upside over the next 12 to 24 months. Investors should also monitor key resistance and support levels while exercising caution in U.S. equities and considering opportunities in international markets. How might the potential $40 breakout in silver impact investor sentiment and market participation? What key levels should traders watch in gold and silver to confirm continued bullish momentum? Share your thoughts in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.